Hey folks, welcome to Verified Investing. My name is Gareth Soloway, Chief Market Strategist here. Now in today's video, we're going to deep dive into the charts on gold, silver, platinum, and palladium, and maybe even take a look at copper. What are the charts telling us? Where's the next big move? New all-time highs or still further downside? Let's rock into the charts right now. This is your gold daily chart. And so what we can see is this was that incredible bull run where we basically started at 3,300. We ran all the way up to 43, almost 4,400. And then we started to pull back. This is very normal for charts. Even in bull runs, things have pullbacks. You have to expect that. Now, the biggest issue for me is the pattern formation and the likeness to the 1979 bull market in gold. So what we're going to do is we're going to do a little time back. We're going to take the DeLorean and go back in time to 1979. Now, if we do that, what we see is a almost identical pattern formation. And always remember, folks, that patterns repeat over and over again. That's why technical analysis works so well, is that human emotion is our buyers and sellers, right? When you're buying, you're generally greedy. You got to jump in. It's going to go up. You got to get on board. When it sells off, you get fearful. You panic, you dump, right? And so charts are really representations of humans that are greedy, right? Or fearful. And that's why it repeats, because greed and fear has been with us since the beginning of time. It's part of our emotional makeup. All right. So that again gives you a little idea there. Now, what we see in 1979 is this beautiful bull move up, right? And then we went sideways. So you had this up move, the first bull run, and then consolidation. Over here in 2025, we went up and then we went sideways, right? So you have the same formation up in consolidation. This is known, by the way, as a bull flag formation, right? Where you kind of go sideways. It basically digests the recent bullish move, and then it breaks out and has that explosive move to the upside. Over here, up move, consolidation, and breakout. Now, what's amazing here is if you count the amount of green candles up, and remember, this one's red, but it closed higher, right? So it just gapped up and then closed down, but it was still a green week. If you count the amount of green weeks, 1, 2, 3, 4, 5, 6, 7, 8, 9. So 9 straight up weeks in 1979 going into 1980. If we look over here, 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. All right. Now, what happened in 1979? We had a correction. And in fact, we put in a major top, right? We corrected. Now, here you had a big reversal candle. In 2025, we actually had 2 candles in 2 weeks that essentially negated that previous green, right? So here you have one that totally negates it. Here you have one that only half negates it, but then the following week, we kind of conclude by going all the way back down here. And so you can see it doesn't necessarily perfectly, mirror it, but it certainly rhymes in a way. It's very similar to the price action. Now, what we know is after this pullback, we got a few weeks of sideways chop before the next move down. Look at what's going on here. We're starting to get the sideways chop. In other words, on the weekly chart, I'm expecting another week or so sideways, and then we should get our next move to the downside. All right, that's also confirmed by going back to the daily chart, which is now in 2025. This is actually today's price action right here. And if we look at this, there's a classic pattern in technical analysis. It's a down move and then choppy sideways consolidation. It's known as a bear flag, and it typically resolves itself to the downside. All right, that's exactly what we are making here. We have a down move and then sideways chop. And again, replicating that 1979 consolidation. Now, as I always like to say, folks, remember, this is not 1979, 1980. All right. There are differences, and I'm going to explain what those differences are and why in 1980 we didn't see those all-time highs again for literally decades. Right. So if I was in that camp, I'd be dumping my long-term holdings on gold and saying, I'm out, I'm done, see you later. I'm not. I'm holding on to them, and I'm going to explain why. I'm holding on because in 1980, we saw Volcker raising interest rates by tons, right? I mean, we saw interest rates in the 80s at 15, 16, 17%. What's the Fed doing right now? They're lowering rates, right? They're bringing rates down. So that's different. Then you look at things like, what about the US debt? I mean, what's my favorite? Why do I like to hold gold? Because I don't trust the fiat system. I see the US debt. I see the amount of printing, the Federal Reserve, easy money policy, all of these things, no backbone to stop spending makes me basically bullish on gold. In 1980, it wasn't like that. Debt to GDP was 32%. In current times, 130%. Okay. So there's night and day differences, which is why to me, we're seeing the normal pullback in gold and we should see further downside, but it then turns back up and makes new all-time highs by 2026. All right. So I don't think we're going to make a new all-time high this year. Only a month and a half left, month and 3 weeks, whatever it is. But I do think in 2026, we make new all-time highs. And I think we even break $5,000 an ounce. All right, so that's where we are. Let's flip over to, well, you know what? Let's talk about first support. So let's talk about if gold comes down here, where does gold ultimately go? Basically, we're going to look for first, our next support level is going to be right in this range around 38.45, then a secondary level in this range. But really what I'm looking for is I would love, because I want to buy more gold, I would love to see a flush out here. Former pivot high, and we come down here to about 3,500. At that point, I think we springboard to $5,000 an ounce. All right. So we'll keep our eye on that and see where it all plays out. But that's my guess, at least. My guess is we ultimately head to that level or to see that range there on the markets, guys. All right. So again, keep an eye out. This, I do believe we will see a major move up in gold in 2026. All right, let's get back to the charts. I want to go over. Oh, by the way, one last thing on this chart that I want to show you. In 1979, where did you pull back to before you got your first substantial bounce? Look at the low right here. Look at this. And this is one of the reasons why I like this, because basically we pulled back to the former consolidation high right here, which would mimic a pullback to this high right in here, right in that range. All right. So again, that's kind of why the thesis says, all right, this is where we likely are going to essentially. All right. Now going on to silver, let's take a look at silver. Now, silver, again, this is a thing of beauty. I called the top on silver, but again, to me, it is just a near-term top. What do I mean by that? Well, again, listen, if you're bullish, listen, there's different reasons to be bullish and bearish on gold, right? I mean, gold is a much more, the use case is safe haven asset, right? It's, oh my goodness, fiat currencies, et cetera. While silver does have an industrial side to it. But when it comes down to it, it's still denominated in dollars, just like platinum and palladium. And so for me, any metal in general, while you might see a bigger percentage drawdown in silver because of the industrial side and because the US is slowing economically, it's inevitably, to me, it's going to eventually go up. So I do want to be a buyer, but I'm a little bit more of a patient buyer. I guess that would be the way to talk about it, right? So what we see here is this is your low from 2008, excuse me, the financial crisis low. This is your low from 2020, the COVID crash, up to that high in 2011, which was your bull market high on silver. And look at where we topped out. Boom, right? That's honestly how I called that top. It was just that simple. Like it literally, I don't do calculus. I don't do any of this crazy stuff. I just look at the charts and I draw trend lines. That's it. And it's amazingly accurate. All right. Not perfect though, mind you. All right. What kind of pattern? Down move inside bar. This is a bearish pattern. I'm still expecting a move down below 43, anywhere between, I would say 43 and about 39 is my accumulation zone. This area here, there's a gap fill right there. That's just below 40, but I'm going to start nibbling when we get below that $43 level. All right. So again, longer term, I still think silver is going a lot higher. I think this is just a pause, a pullback, a digestion, basically shaking out the weak hands. But eventually, I think it goes much, much higher. Okay. Now going to platinum. Platinum's had a great move up. I'm bullish long-term on platinum, but I'm not buying until we come back in here. Just a side note here, guys. Look at the weekly chart. Look at where we topped out right here. See all these highs? And we went right there. And so this let me see very easily why, or, basically the reasoning behind why we should be topping out right here. And we are seeing a pullback here. Now, my buy level remains down here. Let me flip back to the daily chart. This here, you have a lot of support and this down sloping trend line. So any flush to basically 1360 to 1280, I'm a buyer of platinum. Same thought process there is that while it's an industrial metal, yes, it also is a rare metal and therefore denominated in dollars. Price needs to go up to reflect that. Platinum onto palladium, same thought process here. Number one, look at this beautiful zone. High pivots right here. We broke out, low pivot, low pivot, low pivot. We broke below, resistance was still high pivot, and look at where we went right back to. And so the chart's really well dictated, guys, beautifully dictated the resistance points here on the charts and knocked it down. Now, for me, you have this upsloping trend line, these two pivot points going through major levels here and here. This is my buy zone, anywhere from about 12, we'll call it 1290 down to about 1200. This zone, I start to accumulate aggressively on the chart of palladium. Now, just quickly on copper, guys, copper is not looking good in the near term. So again, it makes sense, right? If we're going to see platinum and palladium and silver pull back further, copper should as well. The negative for copper is it's the most industrial metal out there, in my opinion. And you can see, look at this huge drop, and then this is a bear flag. Once it breaks this low around 480 or so, it's likely going to flush to this longer term trend, which goes back to 2022. 1, 2, 3, 4, 5, 6 hits. This would be the seventh. That would be around $4.25. That, my friends, is the level, the downside target. Now, again, copper's longer term, yeah, copper probably grinds up because of, again, it's denominated in dollars, right? But I do want to say that copper is the one I'm the least a fan of, because I do think that as the most industrial metal out there, right? At least, listen, I bought platinum and palladium as a store of value. All right. I haven't bought copper. Maybe I should, but I haven't bought copper, right? I bought gold. I bought silver, right? I mean, I've bought these other metals. Copper to me, again, is the most industrial. Therefore, you have to be expecting that if the economy here in the US continues to go towards recession, globally, maybe we go into a recession, copper could continue to stay weak, versus other ones, if they print our way out of it, those should see the biggest move to the upside. All right. As always, folks, if you've liked this technical analysis, I just say, please share it with friends and family. That's all I ask. I will bring you the heat. I will give you the levels, pure charts, no BS, right here at verifiedinvesting.com. Take care.